Vamos a recuperar la conexión con Eliezer Ben Zimra, Fund Manager of the Carmignac Portfolio Flexible Bond. Eliezer, good afternoon again.
Good afternoon again.
We were speaking of the bond market. We were saying that you're a fund manager specialized in bonds, and I asked you if you could detail the current market scenario and why has bond market volatility been so high. So please.
Yeah, bond market volatility is so high, as I was saying. Central banks tightened, so raised rates a lot over the last 12 to 15 months. We are now approaching 5% in the US, even above 5% in the US, and will be close to 4% in Europe. And at the same time, we start to see inflation going down. So we think that it's the best time to be invested in fixed income markets when rates, short-term interest rates, are now higher than the inflation rate. That's the case both in the US and in Europe. And that's why we think that bond market volatility was a story of 2022 and maybe of the first quarter of 2023. But for the second half of 23, we think that bond market volatility will decline, and then will enable funds that are positioned to lower rates and lower volatility to benefit from that kind of environment.
Mm-hmm. In this market environment, what do you offer as an investment solution to support your clients?
So myself and Guillaume Rijad, we are managing the fund called Carmignac Portfolio Flexible Bond. We are managing this strategy, this global flexible fixed income strategy, since 2013, and the mandate is to generate both positive absolute returns and to outperform fixed income markets when they are deeply negative. For example, last year, 2022, which was one of the worst years ever on fixed income markets, the fund has outperformed by 900 basis points fixed income market and its reference indicator. And to do this, we have three pillars. The first one is a very diversified asset allocation on fixed income market. The second one is to manage the exposure to the interest rate risk. And the third one is that we collaborate with all the experts in-house for the bond picking, meaning the investment in each issuer or issuance on credit markets and on emerging markets. And related to your previous question, we think that we can generate for the months and the years to come strong absolute and relative performances through investments on core interest rates. We think that rates will decline over the next 3 months or 6 months, that inflation will decline, but we will stay in a regime where inflation will have difficulty, I will say, to remain at 2%. So inflation-linked products are an essential part as well of our allocation. And as well, we are really positive on credit and on emerging markets. And I think that with these three performance drivers, we can support our clients to deliver them strong results on fixed income markets.
Eliezer Ben Zimra, Fund Manager at the Carmignac Portfolio Flexible Bond. Thank you so much.
Thank you.
Bueno, pues nos hablaba de la volatilidad de los bonos, de cómo